All right, let's do a end of day review for today. Today is August the 9th, 2023. It's a Wednesday, just one day before a very high impact news tomorrow, Thursday, which is the CPI data release for the July. Last month the CPI released on Wednesday, but this month they put back on Thursday. So let's see how it's play out. But I want to go back to one of the practice trades. I think the only practice trade we take this morning, and we did recap that. So we do long again. You remember yesterday we also go long, but we learned from a lesson yesterday that we bet on the reversal, and our trade idea is right, but we go in too early. So that's a lesson we learned from yesterday, and today we learned the same lesson. Okay, so just how we approach the trading system that we try to be right now. There's no failure, right? There's no problem. There's no failure. Anytime it don't meet your expectation, then that's the lesson you learn. You use that as feedback. Anytime you make an error or mistakes, is the opportunity to learn from that. So if you approach the trading from that perspective, then we completely remove our frustration right there. Though the frustration, it comes from where our expectation does not meet the result we want. So that's where frustration comes from. And when we are completely remove the frustration from our trade system, then we have a so-called unbeatable trading system, only produce results. And if we make an error, that will be a feedback. We improve our system. It will get better. It will produce better results. So that's kind of our philosophy right there, the mindset right there. If we have the right mindset, like this channel, it really try to communicate the message that the mindset is everything. If you have properly mindset, then trading will come to you easy. Opportunity will show at your door. All right, that's enough for the so-called philosophy right there. All right, psychology. Okay, so this is the trade that we take, the practice trade, right? We saw this order block right at the order block at 9:52 on a 1 minute time frame, and we saw displacement fair gap to the upside, and then it retests at 10:09, and we go in. So very simple, right? It's the set of simple. And the buy side, sell side we were taken. Yeah, it's taken in a short term right here, and also in a long term it take right because it go down, take a London section low. Also, right, but it did not take out the prior day low yet. But anyway, that's our our reason or our logic behind this practice trade that we take right here. And our target is the London high. And let's see how it's play out. So let's see how it's play out, I think. And we put the stop loss below the order block 5 cents, and you know what? It got hit at 10:50. It got hit. So let's see. I will take the screenshot of that. Right here, the market go down, and it take our stop loss right there. We put a stop loss right there. So yeah, we anticipate it's our risk and our reward. So I think we risk 30 cents something, and we get reward of $1. So that's So that this trade did not working out, and it gave us a feedback telling us that this auto block, you see, it's so many tests. Auto block is not yes a reliable one. You know why? Now we look back, we see that there another short setup up here, and we have to let that short setup play out to take all the sell side liquidity before it reverse go back. This is the lesson that we learned on Monday. It's very critical lesson. When you want to go long, but also you see a short setup, then you better wait for that short setup to go to unfolding, because you know that when the algo set up this, they want to take a sell side liquidity, so you don't want to engage long right away. Let it run its course, let it finish its leg down, let it finish its move, and you can engage. Or if you want to go in short term, right? So don't only try to go against the trends all the time. That's the lesson we learned. Okay, let's look in the real chart right here, 51, right? So at 51, we got knocked down. 51 right here, we got knocked down. All right here. However, if you look right here, let's make right here. Okay, let me turn off the fellow gap right now. Turn off the bubble for now. It's too crowded for now. Okay, it look better, right? So if you look at a short setup right here, you have this auto block. Okay, you see the block right there, that auto block right there, that error. Okay, let me colorful this a little bit. I believe this one is the 50. Let's give the color. How about this color? How it look like? Oh, that is go back to this color, and we want this transparent a little bit. Okay, so this color, yeah, better. So this color is 48. Basically we choose the wrong box. That's okay. Okay, so let's do this, right? Okay, so basically you see the light yellow color right there. That is the auto block, and you see that it break away that auto block, create a fair value gap, and retest 1 time, 2 time, 3 time, boom, it going down. So when we try to go along, they here it's too early to go along. We have to see the setup from here, that the algorithm or the market tell that it needs to go down. We haven't seen all the sell side liquidity down here yet. So that's the critical lesson that we learned today right there. So instead of hungry and fear of missing out to go long right away. And also another thing for you, that in order to go long, try not to go long when it's too close to what? To the 930 or open or 30. That's not smart, sell side, buy sell liquidity for this grab yet. So if you want to go long, wait when it moves further down from the 930 open. That could give you the huge upside buy side liquidity right there, and it did. You see that? I mean, it not reached exactly the 930 level, but it reached this block level. We will go to that level right now, and you can see what the reason why we are point out this level right there. Where we entertain this level is a so-called spot level, but actually it's in the 5-minute time frame is an auto block. Not really auto block, but it's maybe a bearish breaker. We'll look into it later. But right here we have beautiful short setup. So forget about a long setup right here. I think we make an error right there, make a mistake, and we learn. We learn from that. So the market teach it right there. So this is the lesson for us. Instead of go long, we have to go short right here. You see auto block, right? This auto block, it take the buy sell liquidity. You see that? And then boom, go down and retest right there. So if we go long right here, that's a mistake for us, right? Because we trick that. All right, this is a auto block and it's a retest. So we go long. Because we believe that it will go up. Where is the 59, right? Hold on, let's see what the auto block that we have. Okay, so we say we have auto block at 52, 952. So where is our 952? Right here, we treat this auto block, federal gap, right? And then retest right here. And then one more time right here, it would take it. And then down here, it would take it out, stop it out. So that's how a long setup. However, if we look carefully, we see a short setup right here. So let's do a, then where it's going to? It go to the fair value gap right here, fair value gap 4 hour time frame. Yeah, 445.55. What is 445.54? Oh, okay. We try to identify the sell side level right there. We know the axis is 1156. Right. We look at right here. Four-hour time frame. Okay, so we identify right there, right? That is our favorite. Okay, let's see. So the level right here, pay attention right here, 45.15, right? Which is on the 4-hour time frame. You can see that is our fair value gap right there. This is the fair value gap high. We did fair value gap high right there. That's how we come up with that level, and it reached that level right there. So that's our target when we go short right here, right? So we have a beautiful entry right here at 37. You can go here at 37. You know why? Because the buy sell liquidity, the sell side liquidity is not equal trap right here. It's not clear yet. So this is a beautiful short right there. We short when we see, so far in our database, we only short when we see the intermediate or short-term buy-side liquidity. If you have confluent with the buy-side liquidity on high time frame, that's great. But if not, you look carefully right here, you can see that. Oh yeah, we can short right here. Perfect, because you see in the short term, the buy-side liquidity were taken. However, in the intermediate term, it's not taken because this is the auto block, so you don't inspect it. So it respects the auto block, but it takes the buy-side liquidity. That's a beautiful signal for you to short right there. And another signal for you right here that the sell-side liquidity were not clear. That means you can engage short them right there. If the cell cycle were taken down here, then it gives you a little bit, resistance right there. Wow, it's beautiful source setup right there. Okay, let lock this tray, set up into our database. So next time when it show up, we will take it, or we have a reason to take it because we already saw the setup before. Okay, so what do we want to say right here? Oh, hold on. Let's mark down the entry right here, right, 37, and what the auto block at this about 107. Wow, that's a good right there. Okay, let me duplicate this right here. Let's put it up here. Oh, channel 1, and you want the arrow in the bottom, right? I want in the bottom. And what you call this? A 1, right? Oh, it's very confusing. It should be in the top. Okay. And what is this one? A 1. So this is the auto block right here. Let me give a bright color a little bit so we can see it better. Don't you think so? Okay. And right here, and then we axis right here, 1156. That's our axis right. Why don't we use this one? The low of the day, right? Is that the low of the day? I believe so. Yeah, that's the low of the day. Low of the day of 1156. So 1156. This is low of the day. So bottom. All right, let lock this tray in. Hold on, we'll do one more thing real quickly here. So we only check, short projection when we see a buy side liquidity. We're taking at least short term, buy side liquidity. Hold on, let's see if this is a short term. What the high of this one? 63. What the high of this one? 66. Yeah, so it's clear. So it gives us a signal that it's safe to short them. If you don't want, you can have another setup right here, my friend, 48. But let's see, go with this one. Go with this one. Go with this one. Then here we go. So what we have right here, what setup we have right here, right? We call auto block, retest. No, I mean fair value dot retest. But in this case, we have how many times it retest? It reset 1, 2, 3, four times. That's a very normally you only need to retest one, but this guy retest 4 times. So that means it trapped a lot of buy side liquidity right there. I mean sell side liquidity. And last time it trapped right here before it gone down, it make a higher low. So it look carefully, that's the signal for you that it's gonna go and drop all the sell side liquidity down here. That's the reason why when you see it come down heavily. Because a lot of sell side liquidity, we will have to sell and exit the long position, and that fuel the down move right there. That's so-called clean move right there. Low resistance liquidity run right there. In this case, we can say 4 times, right? Give you a more conviction right there. And a short setup. We want to generalize the pattern. So right here we just say order block. We don't say bearish or bullish because the short setup implies that it's a bearish order block. All right. If we say long setup, then we imply that the order block is a bullish order block. So to generate the pattern, we just say order block plus fair gap and then retest. So that's an idea of how we name our setup. We have sell side liquidity, buy side liquidity taken, right? In this case, it's short term high. Okay, and another key, another thing we need to look at. Also, we have a what? Plus, we have another one. It called sell side liquidity trap. Yes. In this case, it's that the low, the higher low. Plus the signature that the algo tells us that it's ready to go down. Right? It consolidate right around this order block. And the last move it make is that it make a higher low, which it trap the sell side liquidity. Then it's a good, good signal for to go short them. And the entry time for is what? It's 10:37. All right, and exit time is 11:56, which is low there right there. Let me move right here. It's easy to see much better. All right, what I will want to tell about this, it's beautiful setup. I mean, if you look at that, it's like a perfect picture right there. It tells you everything. The target is the X fair value gap X4. Basically, it's the X4, right? High, or the previous day low right there, right? Just up right here. So right here you see that entry, and we pay attention to this order block, and then our target is right here, my friend. It's beautiful in setup. Just be patient, train our eye to identify the setup in real time, and boom, going. If we haven't identified yes, then just analyze it, and eventually we will get there. We will see it in the future. So that's the setup we just learned, right? from our lesson, from our errors today, right? Our mistake today. So this order block, let me favor the gap. Let me put into our journal right here, retest, right? And look, did a short setup. On M1, which is 1 minute time frame, right? We put in there. The key for this setup is that what happened? Okay, that you have a buy side liquidity taken, right? Buy side like a short term high, and then you have a sell side liquidity trap right there, which is a lower, no, I mean a high low. That's the signature for you to go in. And then you have 4 times retesting the bearish order block. That's some of the conditions that have to make this a very high properly set up for it right there. Okay, we only have about 4 more minutes. I want to go to this setup real quick. That we look at the 5 minute time frame. It looks beautiful like this setup right here. So today, if you have one trade right here, short trade, and look at how much it gives you, how much you gain, how much profit. Let's say you go here, look what you have, $3 move right there, my friend. And then how much you reach? You just reach 5 cents above this. Come on, it's so much unreal. You reach about 30 cents. You see that? And you gain $3. It's like 1 to 10, 1 to 11 risk reward ratio right there. Oh man, you don't need to do much. You just do 1 trade a week. They're there, so you can, good for the rest. So risk and reward ratio is what, 30 cents, and you get 30 cents, and you get $3.32, 30 cents right there. So your risk reward is like 1 to 10, my friend, roughly 1 to 7, but let's go conservatively, 1 to 10. Come on, that's a huge move for today. It's very volatile. Beautiful. Okay, let's go with this setup that I keep it for last, so the best for last. Okay, you see this? It's so clear. I mean, what could more clear than this one? You see that there? Is when we engage long, right? We make sure that we have a sell side that we were clear and ready to reverse. That means when it go down here, no more sell side liquidity, then the algo gonna run up. And you see, it have order block, have fellow gap right there, and retest. And entry time is 12:20, and the target is 9 open, but not exactly 9 open, but you look at this candle, it should be in the area of this candle on 5 minutes right there. I take this around 1:18, which is I think 2:18 Eastern time. It's not fully unfolding yet, but you will see that. You see, so we take a long position, the opposite of the other setup we see, right? We see the high or low, that means the sell side liquidity was trapped. In this case, the opposite happened. The buy side liquidity was trapped. It make a lower high. Okay, it make so it trapped the buy side liquidity, and then boom, go and take it all the buy side liquidity right there. That's the beautiful trade right there. You see, you have buy sell liquidity, sell liquidity were taken, and you have a buy sell liquidity trap. Perfect setup, perfect entry right here, going boom. Okay, let's look at the 5-minute time frame. So that can help us to see that's how look in the chart. That's a screenshot, right? All right, here is my 5-minute. Okay, so that beautiful setup around here, right here. And the reason why it not read exactly at the over 9:30, because you have to identify this candle at 9:30. This is trick like a bearish breaker right there. You see it retest there. Or you can trick it at a fair value gap on a 1 hour time frame. It will make more sense. These are the area, right? Is that right? Yeah. So pay attention to the candles. It's going to retest level. So it's not exactly our target should be we exit around here. Give us a maximum profit. Otherwise, it come back and and take away all our gain right there if we don't realize, if we don't exit our trade. And this level is coincident into a fair value on 1 hour time frame. Let's look at that. So we can wrap up around here. Right here. Here's our 1 hour time frame, my friend. Right here, you see that? It go up, it retest this fair value gap, you see? So our target is about right. It's right there into fair value gap. It may not hit exactly the 9:30 open, right? But it hit into this fair value gap. So that's how we set our target right there. All right, I think that's it for end of day review today. Two beautiful, trade setup, one short, one long, and we learn a very beautiful and wonderful lesson right there. The condition where the setup gonna show up, and as soon as it meets the condition, we go in and check the trade. Remember, sell side liquidity taken either a short term or it's either confluent with a high time frame sell side, then perfect. If not, it still give you a high properly set up. If you have another condition, let's say the buy side liquidity were trapped, then you can take confidently going and take a long trade. At the same time, if you want short them, you see the buy side liquidity were taken, and also the sell side liquidity were trapped, which is a high or low right there. Then you're good to go. All right, that's it for now. Thank you. Bye for now.